In this video, we're going to provide an update on the performance of my InvestEngine stock and shares ISA portfolio. Over the last 2 months, I've combined my InvestEngine, Monzo and Trading 212 updates into a single video, but I'm going to separate them out again as I've made big changes to each of these portfolios and I want to explain the changes in separate videos. The first big change is that I've transferred my Monzo ISA into InvestEngine, and we'll go through this in this video as part of the portfolio update. If you're new here, I'm Alex, a management consultant by day, and on this channel we like to discuss all things personal finance with particular focus on how to grow your money. If you'd like to follow my own personal finance journey with regular portfolio updates of this InvestEngine portfolio, for which I have a goal to reach 100k within the next 2 years, then I'd greatly appreciate a subscribe. But for this video, let's get into it. Before we take a look at my own portfolio, we need to see how the markets have performed, as over the past month there's been some huge economic policy shifts which will have impacted the markets and my own portfolio's performance. In the US, the S&P 500 is up by 1.76% over the past month at the time of recording, and it closed at a record high the day before I recorded this video. Whilst in the UK, the FTSE 100 is down marginally over the past month by 0.20%. We can see for both markets that the first part of September saw declines, and this was mainly as a result of fears sparking up again regarding a potential US recession. But these fears quickly calmed after the 6th of September, and on the 19th of September a huge jump happened, particularly in the US markets, as the S&P 500 jumped 1.7% in one day. This performance is a far cry from what we saw at the start of August, when the market crashed and the S&P 500 sank more than 3%, which was the 7th largest single-day points decline since formal records begun. At that point, investor sentiment was at a rock bottom, with the benchmark market volatility index spiking. But just over a month later, this seems ancient history, as the S&P 500 has now hit a record high, topping the previous record set on the 16th of July. The difference in performance in just over a month shows that the market in the short term is volatile, and part of the process of investing is to accept this. Although it's hard, it's probably not best to lose sleep when the market is down in the short term, as history tells us that a period of growth is likely just round the corner. Whilst over the long term, historically the good days have outweighed the bad days, leading to overall growth. This is why, although I do these monthly videos where I touch on market performance, the markets don't impact my strategy. My investing strategy is very much focused on the long term, and I invest a set amount every month, irrespective of how the market performs. Any regular viewers have probably had enough waffle about my strategy, so let's now come back to the reason why we've had good performance this month, particularly on the 19th of September. The spike in performance was mainly in response to something we've been talking about on this channel for a long time, in a Federal Reserve rate cut. This month, the Fed finally cut rates, and it wasn't just a small cut either, it was a jumbo half-a point rate cut, leaving the federal funds rate at a range of 4.75% to 5%. This was huge news, as it was the first rate cut in over 4 years since COVID times, and this milestone marked a significant sign that the high interest rate period may be coming to an end, as the Fed also signalled more reductions will follow. This is great news for the stock market, as stocks tend to do better in low interest environments, particularly small cap stocks which tend to rely on borrowing for growth. But what could be more important for the stock market is the direct impact of the rate cut in helping to deliver a soft landing for the US economy. Inflation appears to be stabilising, with US CPI inflation recorded at 2.5% in August, which is getting closer to the 2% target level, and marks a fall from the 2.9% rate in July. Whilst at the same time, many investors now feel that a US recession will be avoided. If this becomes a reality and the Fed does indeed deliver a soft landing, it will be a huge relief for most investors. This is because the global stock market has been heavily influenced over the past 2 years by whether market sentiment believes that the US could achieve a soft landing. When economic data has been negative about the prospect of a soft landing, there's been big stock market falls, and when economic data has been positive, there's been big rises. Most people now believe we're on the right path, and I certainly hope that the soft landing will be achieved, so that going forward, the focus of the performance of my investments at least are more on the companies themselves, rather than the macroeconomic environment, as it has been for the last 2 years. Nonetheless, this month has seen a huge economic milestone in the beginning of rate cuts in the US, and the markets have reacted positively to this, at least at the time of recording. So now we know this, let's move on to my portfolio's performance. The first thing we can notice is this ISA transfer component at the top here. Over the past month, I've transferred and consolidated my small Monzo portfolio into my InvestEngine stocks and shares ISA account. And I started that Monzo portfolio to test out a £100 a month portfolio and hopefully help other beginner investors start their investing journey, as Monzo's user experience for beginning your investing journey is really good. But now I can't justify the fees on Monzo's platform and want my funds invested in ETFs I choose. So for that reason, I've transferred those funds from Monzo to InvestEngine, and I'll go through the exact reasons I've done that during a separate video where I'll go through the final performance of my Monzo portfolio. In terms of the process of transferring the ISA from Monzo to InvestEngine, you'll see with this component that I've been informed of the status throughout by InvestEngine, and this has been really useful for someone who's never done an ISA transfer before, so I was very uncertain on what are the stages, what are the timelines. In terms of the timelines, it's taken just over 2 weeks. I started the transfer on the 1st of September, and the funds were invested in my InvestEngine ETFs on the 17th of September. And I was quite pleased with those timelines. I didn't know what to expect, and 2 weeks was a good timeline for my opinion. So overall, I've been pleased with the communication from InvestEngine throughout this process, and I've been pleased with the process of the ISA transfer. Let's now take a look at how my portfolio has performed over the past month. We can see my portfolio is up by £142.65 over the past month in pound terms, and 0.12% in percentage terms. And I'm now sitting at a balance of £33,419.30. The big change over the past month has been the ISA transfer, and that has bumped up my balance. We can see through the graph here that over the past month I've had 4 top-ups, which we can see with the black dots there, and 2 of those top-ups have been as a result of me moving funds from Monzo to InvestEngine. One, the black dots, is from the ISA transfer, and the other one is from myself withdrawing funds from a general investment account I had with Monzo and then depositing those funds with InvestEngine. That process actually took a little longer than the whole ISA transfer process, which is crazy, but it's done now as well. In terms of the graph, it looks very similar to the S&P 500, and we do see that massive jump on the 19th of September with my portfolio, which isn't surprising because the whole global stock market had a really good day on the 19th of September, and my portfolio is heavily exposed to global stocks. In fact, only 5% of the portfolio is not invested in stocks, and that is the gold ETF. So overall, it's been a good month in terms of performance and a significant increase in the value of the portfolio, which mainly comes from deposits. The total of my contributions this month has been £3,219.43, made up of my regular deposits and the Monzo transfer. In terms of the overall performance for this portfolio, let's click on the Max tab and we can see the performance since I started the portfolio. I'm up overall by £2,748.30 in pound terms and 18.23% in percentage terms. And I'm pleased with this performance as the last 2 years, which is the period I've had this portfolio, have been rather challenging for the markets. The markets have gone up and down based on the factors we talked about earlier, whether the Fed can achieve this soft landing. And any regular viewers will know that I've been talking about rate cuts for a long time, hoping that rate cuts would come sooner rather than later to spur the performance of this portfolio. So I'm hoping over the coming months and years, the low interest rate environment will help this portfolio significantly. So overall, I'm happy with the performance over the past month, and let's now take a look at how the individual ETFs making up this portfolio have performed. The first ETF in the HSBC MSCI World is up marginally in percentage terms by 0.27%, and up by £101 in pound terms. You may have noticed that I've set the target allocation to 100%. This is not an error, it's intentional, as I've recently made a deposit and I want 100% of that deposit to be invested in this fund. I want to increase the percentage this fund makes up of my portfolio, and the easiest way to do that is by setting the target percentage to 100% to ensure that the recent deposit I made is completely invested in this fund. The recent deposit came from the funds I've withdrawn from the general investment account with Monzo. I put it into InvestEngine and now using it to increase the percentage I have with this HSBC MSCI World of my portfolio. You'll see that the audit is not yet complete. I've still got a timer symbol here. When the audit is complete, I'll reduce the percentage, the target percentage allocation for this ETF. And what I'm going to do is I'm going to reduce that to 75%, aiming for 75% of my deposits going to this ETF going forward. I'm going to change the world small cap to 10%, emerging markets to 10% allocation, physical gold to 5%, and I'm not going to invest further funds in the cloud computing ETF, but I'm going to keep my existing funds I have there. So I have a target allocation of 0%, keeping the existing funds I have already there. I'm not going to withdraw them, I'm not going to sell them. In terms of the next ETF, that's the iShares MSCI World Small Cap, and this is my best performing fund over the past month. It's up by 1.58% in percentage terms and £70.80 in pound terms. And it's not surprising that this fund is the best performer this month, given what we discussed earlier with small caps tending to thrive in low interest rate environments because they tend to rely on borrowing for growth. So that rate cut has been huge news for small caps, and the signal that further reductions will follow can only be good news for small caps in helping them grow using borrowing. The next ETF is my worst performing ETF, and that's the iShares MSCI Emerging Markets. This is down by 2.24% in percentage terms and £38.87 in pound terms. So a bad month for this ETF. The next ETF is up. It's the iShares Physical Gold ETF, and it's up by 0.92% in percentage terms and £15.61 in pound terms. The rate cut should actually be good for this ETF because gold is competing with other asset types, particularly bonds, in terms of getting investor money. And if interest rates reduce, that means the yield for bonds should also follow and reduce. So that should hopefully mean that bonds are less attractive compared to gold, and more investors put money into gold. So hopefully the rate cut also is good news for gold. The final ETF in WisdomTree Cloud Computing is down over the past month. It's down by 0.81% in percentage terms and £6.19 in pound terms. I'm hoping that this rate cut will help the type of companies within this fund, as they also tend to rely on borrowing for growth. So I'm hoping they'll be able to grow more by being able to use borrowing at a lower cost with the rate cuts. So overall, 3 out of my 5 funds had a positive month, and overall I've had positive growth in my portfolio this month. The big news has been the rate cut, and I'm hoping more rate cuts will follow and lead to good performance in this portfolio over the coming months and years. Let me know how your portfolio has performed over the past month, your thoughts about the rate cut, and also if you fancy finding out what my favourite 15 InvestEngine features are, I have a video around here. Thanks for watching.